Good morning, everyone. Today is your market watch for the Wednesday, February 28th, 2018. And here's what we got going on in the market. So I'm going to start the charts right here. And we're going to take a look at the Dow Jones Industrial Average first. It's up 29 points, and it's kind of fallen back a little bit this morning. It was up a little bit higher earlier. 25,439. Now, the market, the Dow Jones Industrials, is following a steady course that I expect it to follow until March, which is basically slowly climbing back up toward 26,000. And perhaps even exceeding the old highs. It could happen. But we're going to have to keep an eye on it. What I expect is a very slow climb until then. The big mover today, I just got to talk about, well, I'm going to talk about it in a minute. I'm going to get to it. We're going to take a look at oil. Oil, we see a little bit of a decline just in the past little bit. It's down 57 cents for sweet light crude at $62.42. Okay, so we see a little bit of a drop in the price of oil. Oil's a very important price to follow. It's like the copper price. Copper price is a very important price to follow. If we follow copper right now, we see copper is down a little bit right now, but it's down to 311. It was as high as 330, but copper's not doing too bad. Copper's doing a lot better than gold and silver because it's not being suppressed like they are. So let's take a look at the silver price while we're in this, talking about this. And the silver price is up 7 cents on the day, $16.45, but it's right in the middle of its range. Around $16.50 is the middle of its range. You see this spot right in here. That's the middle of its range. So if it goes up maybe another 5 cents, it'll be directly in the middle of its range of what it's been running for the last little while. I'm not really calling that a range. I'm just saying that's where it's been for the last month or two. It's been running in around that price. So it hasn't really went anywhere too much. So now let's take a look at cryptocurrencies. First, Bitcoin at $10,518. Now on my other channel, the Delta Report, and if you want to go there, all you have to do is enter into the search engine on YouTube, Delta Report, and you'll find it immediately. On my other channel, I go into a comprehensive talk about Bitcoin in the second part of the Delta Report this morning. And I talk about it for about 15 minutes, about what I think Bitcoin is going to amount to in the next little while, in the next few years, like down the road, what's going to happen with Bitcoin. That could prove interesting. Anyway, let's take a look at the cryptocurrency market capitalizations. What we're seeing here is we're seeing everything's in the red pretty much, but it's at roughly $450 billion market capitalization right now. And I expect Bitcoin to actually be very slowly rising until the end of March, along with all the other cryptocurrencies rise with Bitcoin, of course. So I see it just being a very slow rise, and Bitcoin possibly could make it up a little bit higher than it is now before the big crash that's coming. Now the big crash might not occur. There might be something similar to what we had, that price correction we had last month, might occur in April, after the end of March, when they raise when the Federal Reserve raises the amount of reverse quantitative easing. This is when I'm expecting the bond price to go up again sharply, and I'm expecting some sort of a reaction from the stock market. But it might not be the big crash. The big crash might be the next one, the following one, 3 months later. And so that's what I'm waiting for. I'm watching for that. And I don't think that the Fed's going to reverse on their policy. The Fed is going to continue with these price hikes. And we take a look at bonds and rates. We see that bonds have priced in now. If we take a look at the U.S. 10-year specifically at 2.88%, If we take a look, we can see this rise right here. When we're taking a look at the 1-year chart right here, we see this rise up right here. This, okay, let me pull the chart in so you can see it better, what I'm talking about. I'll be more myopic with the chart. This rise right here, coming up, okay? That rise is completely caused by reverse quantitative easing, by the Fed selling their $4.5 trillion asset book. Basically, they're not, if these bonds come to maturity, which they're starting to come to maturity now, they're not rolling them over, they're not repurchasing them, they're letting them go, you know, and that's flooding the market with bonds, and they're going to continue to do this. Now, in fact, they're going to increase the amount, and this is what's causing this rise up. Now, if we expand this out to, let's try the 3-month and see if it's what I'm looking for. Yeah, no, let me try the 1 month. Might even better. Here we go. This is better. You see, now what we're looking at right here is this rise up here to the peak. That was basically the peak. And ever since then, they've been pricing it in. Now, ever since this particular peak right here of 2.94, I think it was, they've really got it priced in. This is just going to continue to bounce along like this until the end of March, when they increase the amount, the Fed increase the amount. Then we're going to see this take a sharp rise up again. It's going to start to climb again come the end of March. In fact, this could actually decline a little bit in the next, it could go down as low as like 2.7 in the next, until March. It could, you know. It's 2.89 right now. And then after the end of March, this is going to take off again. When this takes off again, that's when we're going to see our next problems in the market. And that's coming. Okay, so now take a look at the U.S. dollar index. 90.63. She's been climbing up a little bit. And the only reason why the dollar is climbing whatsoever is what the Fed's doing. If the Fed stopped what they're doing right now, and you notice that the dollar's not really substantially climbing. I mean, the dollar was 103 going back, you know, the other year. Now the dollar is 90, right? And it was 89. And it's only bounced back from 89 to 90. And all these market analysts and stuff out there are saying, oh, rally in the dollar, rally in the... That's not a rally, man. To go from 89.6 to 90.6, it's not a rally. It's only 1 point, for crying out loud. A rally would be to see it go back up to 100 or higher. That would be a rally. This ain't no rally. This is a dead cat bounce, man. And I'm going to tell you what's happening here with this dollar. Is the only thing giving this dollar support right now is what the Fed's doing. If they pull out support with this, if the Fed says, okay, we're going to go back to quantitative easing and we're going to not raise interest rates any higher, and we're going to stop with selling our toxic balance book, our reverse quantitative easing, and we're going to go back to asset purchases, do you know what would happen to this dollar at this point? Can we say tank? That's what would happen to this dollar at this point. Now, I'm going to talk about something very interesting. I'm going to talk about the Canadian dollar. And I'll tell you why I'm going to focus in on the Canadian dollar right now. It's because the Canadian dollar has started to become very weak right now. Very weak, indeed. It's losing steam. It's losing strength. And I'm going to tell you about something that just could happen. I thought about this long and hard, you know. You know, in the inner cities that they use Tide laundry detergent for money. They use a lot of things for money. They use silver for money. Silver can be used for money in a pinch. Change can be used for money. Now, see, I'm talking about things that they use for money on the black market. Not necessarily things that are absolutely fiat by decree, money by decree, like the U.S. dollar is widely accepted around the world because it's money by decree. It's money that they say. We say this is money, so it's money, and it's money by decree. But I'm talking about things they use as money because they have an intrinsic value, or they could possibly be money by decree, but they're money because people accept them as money, and like things like Bitcoin, for instance, things like gold, things like silver. These are monetary. These are money. Gold is money. I don't care what they really say. Gold is money. If you've got an ounce of gold this morning, you're going to get like 1,300 and whatever U.S. dollars for it, because it's money. So anyway, arguing that point, the Canadian dollar is money. And its price is really down this morning. I'm going to talk about a situation that not necessarily will happen, but actually could happen. There's a fine line between deflation and inflation. And America is heading for a hyperinflation. It's because they've misused the ability to control their debts, and they've misused their ability to create their monetary units, and everything has been mismanaged. They're so deeply indebted, and the only way out is to try to, now at this point, is to try to print their way out. When they do that, they're going to cause a hyperinflation. Now, the Canadian dollar has sunk down to 78 cents, and it's very possible it could actually sink lower. It could actually sink into the 60s or even into the 50s. Seriously. But I think ultimately, Canada is very probably heading for a deflationary period coming up, when the United States triggers their deflationary period. Now, the United States Central Bank is going to react to save the world when they have their deflation. And in doing so, they're going to trigger a hyperinflation, a monstrous hyperinflation. And the Central Bank of Canada is going to try to keep up, because they're going to actually try to create money too. They're gonna go into a quantitative easing program or something similar to a monetary stimulus, but they're not going to create money the same way, in the same unsterilized form as the American bank is going to when they go into helicopter money. Now, here's the thing: when this hyperinflation really gets going in America, the first thing that's going to happen is just like in Venezuela. Watch Venezuela. Except think of a bigger example of Venezuela. They have a black market in Venezuela, where they use anything that they can get a hold of as money. They use the American dollar in Venezuela in the black market. They use gold and they use silver in the black market. They use Bitcoin in the black market in Venezuela as money, you know? Well, the same thing will happen in America, except America is much, 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 much larger than Venezuela. So when this hyperinflation really gets setting in America, there's going to be a huge black market props up, where the United States dollar will still be accepted in the black market, but they'll do just like they do in Venezuela. They'll accept only cash in the United States dollar. They'll wrap it up in rubber bands and weigh it. Because let's face it, when the American dollar gets down to where it's only worth like $10,000 for an egg. And if you think I'm joking, I'm not joking. This is what hyperinflation does to the currency. They'll be bundling up the American dollars, and they'll be wrapping them with an elastic band and selling them by the pound. So that won't be worth much. But what will be worth a lot is what they reach out to as a new form of currency. Now, every country that's ever had a hyperinflation, something that they all share in common is they always reach out to a currency to use as a safety net. Like in Venezuela, they used the U.S. dollar because their currency was going down the pooper. In a lot of countries, they used, during the German Weimar hyperinflation, they used U.S. dollars. Now, they always reach out, but this time they won't be able to reach out to the U.S. dollar. They'll have to be reaching out to something. So here you got the United States going down into a hyperinflation, And they need to have something that they can use for a monetary unit other than the US dollar, because the US dollar is becoming worthless very rapidly. Well, I'll tell you what they're going to do. Number one, they're going to reach out to silver. They're going to reach out to gold. But I think there's a strong possibility, because Canada is their neighbor to the north, that they're going to actually start using Canadian currency as well for their paper currency that actually has value in the black market. And because America is so enormous and Canada is so small, Canada has a very limited supply of paper, actual physical dollars, physical currency. They've got a very limited supply because they're such a small country. They're like a little titter stuck onto America. America's like this big giant. It's like, do you remember the movie Mad Max Beyond Thunderdome? And they had this great big giant, and this little guy rode on his back, and it was called, what did they call that big behemoth? Anyway, this little tiny guy rode on his back, you know, and the big guy, that's what America and Canada are like. America's like the little tiny midget on the back of the giant monster. America's huge, and Canada's just this tiny country to the north. Well, actually, landmass-wise, it's not tiny, but as far as industry and everything compared to America, it's small. And so their currency amounts are small. And so because their currency amounts are small, if America starts drawing all of that currency in to use it on the black market, all that cash, and they're going to want cash, they're not going to want the digital form of the currency, which is in most of the banks in Canada contain the digital form of the currency, which is quite a bit more of. They're going to want the cash, which is very limited in existence. They're going to drain Canada of cash. Well, what would that do? Immediately what it would do is it would create a shortage of currency here in Canada. And our dollar would start going up enormously fast, while the American dollar is actually going down. And because the Canadian dollar would be going up, people would find more value in it. And this would spur the trend on. You see? So right now we got a trend happening with the Canadian dollar. It's weakening. It's going in the opposite direction from the American dollar. It's going down the tube, right? But I could see this trend actually, during the hyperinflation, actually reversing. Canada going into a depression, like the Great Depression, and having its currency, and having that exacerbated by the fact that America would be drawing all the currency out of Canada and south of the border. And so when that happened, I could see a quick snap back in the price of the American dollar versus the Canadian dollar. I could see it going to par, and then I could see it going beyond par, way off into the sunset, where the Canadian dollar could be worth maybe 10 to 1. So, and then later 100 to 1. So one Canadian dollar buy you 100 American dollars or more. And right now it's at 78 cents. So I could actually see that happening if we have a hyperinflation. That sort of a scenario could be actually setting up to draw all the money south of the border. They would to use it in America as a means of exchange on the black market. And I'm going to tell you, during a crisis like this, the black market is not going to be like it is now. The black market's almost non-existent in America right now. The black market will grow absolutely huge. It will more or less be the market in this sort of a situation, because you'll have a giant country the size of America that's in a state like Venezuela is, with the people actually going hungry and stuff. It's going to be weird. I got nothing else to say except it's going to be weird, and this is what we got coming in our very near future. Look, the Canadian dollar's just fell since I've been talking, down to 77.9 right now. That means the American dollar's getting stronger. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye.